All right, let's talk about altcoins. We're diving into that thrilling and, let's be honest, often treacherous world of altcoin investing. It's a space that's absolutely packed with opportunity, but it's also filled with hidden traps. So today, our goal is to help you spot that trouble before it finds its way into your portfolio. Come on, we've all heard the stories, right? You've got that one friend, or you see a post online about some little-known coin that just went parabolic overnight. That search for the next 100x gem, it's a powerful hook, and it's what brings so many of us into this game in the first place. But here is the essential reality check. While you're out there hunting for that shiny gem, there are organized manipulators who are actually hunting you. They're setting traps, just waiting to exploit the hype and volatility. And you have to remember, for every single one of those amazing success stories, there are countless investors left holding totally worthless bags. Okay, so let's get into why this happens. Why are altcoins such a perfect target for this stuff? Well, unlike Bitcoin, a lot of them have really low trading volume and pretty much zero oversight. That creates the perfect environment for bad actors to come in and play their games. So, what are we really talking about when we say manipulation? Look, this isn't just the market being volatile. This is a deliberate, coordinated strategy to fake a token's real value. The entire point is to trick you into making bad trades so that the insiders can walk away with all the profit. If you want to beat them, you have to know their moves. So, think of this next section as your own personal intelligence briefing. We're going to open up their playbook and break down their most common tactics. First up, the absolute classic, the pump and dump. You've probably seen this in action. A group coordinates this massive hype campaign on social media, driving the price up artificially, and as soon as enough regular investors pile in with FOMO, bam, they sell everything, the market crashes, and everyone else is left with huge losses. Next is wash trading, and this one is way more subtle. This is where manipulators just trade a token back and forth with themselves, over and over and over. Now, why do they do this? It's all about creating the illusion of high volume. It makes a project look super popular and in demand, which then lures in real buyers at those inflated prices. Then you've got something called spoofing. Imagine you're looking at an order book and you see a massive buy order. It makes you feel confident that the price is supported, right? But with spoofing, manipulators place these huge orders with absolutely zero intention of actually letting them fill. They just want to trick you into thinking there's strong support so you buy in. Then they pull the order. And of course, there's good old-fashioned insider trading. It works exactly like it does in the traditional markets. People who have secret information, maybe about a huge partnership or a big exchange listing, they buy up all the tokens beforehand. It gives them a massive and completely unfair advantage over everybody else. And finally, you have whale manipulation. A single large holder, a whale, can literally move the entire market for a small altcoin. One giant buy order can trigger a wave of FOMO, and one massive sell order can spark a total panic selling cascade. They can basically dictate the price for their own benefit. So, now that we know their playbook, how do we actually spot these things happening in real time? Well, the good news is manipulators almost always leave clues. Let's go through the 5 big red flags that should be part of your personal defense system. Okay, here they are, the 5 big ones. 1, a sudden, totally unexplained spike in trading volume. 2, you see a known whale moving a huge bag of tokens to an exchange. 3, you're seeing wild, crazy price swings in a coin that has very little liquidity. 4, there's a massive token unlock scheduled that's about to flood the market. And 5, you see a sudden, almost too perfect blast of social media hype. Any one of these should set your alarm bells ringing. And on that last point, this is so important to understand. Many of the coins you see trending on platforms like X or Telegram are getting that traction from bot farms, not from real people. So you always have to ask yourself, is this genuine enthusiasm, or is it just a network of bots manufacturing hype? So you've spotted a red flag. What's next? Well, you don't have to figure all this out by yourself. There's a whole toolkit of platforms out there that can help you verify what's really going on behind the curtain. Your modern crypto detective kit basically falls into 4 categories. You've got on-chain analytics to follow the money, market scanners to flag any weird trading activity, social sentiment tools to see if the hype is fake, and chart indicators that can reveal unnatural buying or selling pressure. And you know, what's really cool is you can explore some specific tools. A platform like Nansen is fantastic for tracking those big whale wallets. Dex Tools is great for spotting things like fake liquidity, and a tool like Lunar Crush can actually help you measure if all that social media chatter is genuine or if it's just being manufactured. And this right here just perfectly illustrates how organized these schemes are. This isn't just random chaos. These are sophisticated operations. They're often run like these secret clubs, with paid membership tiers where the insiders get the signal to buy way before the public hype campaign even starts. Okay, we've identified the threats and we've looked at the tools. Now let's put it all together into a personal defense strategy. This is all about protecting your hard-earned capital. This is where you take control. If you need a reminder of just how important this is, look no further than a classic case study like this. A coin gets promoted by a big-name figure, and the price just goes vertical. But then, just a few hours later, the insiders who got in early dump all their holdings. The price completely collapses, wiping out everyone who bought in at the top. It's a textbook trap. And the level of deception is getting more sophisticated every single day. I mean, we are now seeing projects with completely fake security audits or even using AI to generate photos of their so-called team members. It just proves that you cannot take anything at face value anymore. Doing your own research is absolutely non-negotiable. So what this all comes down to is a shift in your mindset. You can fall for the manipulator's trap, right? Chasing those crazy price moves, acting on FOMO from anonymous accounts, trusting influencers you don't know. Or you can build your smart defense. Verify the project's actual fundamentals, set disciplined stop-loss limits to protect yourself, and diversify your portfolio. It's really the difference between gambling and investing. And that really brings us to our final thought for today. The technology and the tools to spot this manipulation, they're getting better every single day. But in a market that is driven by the incredibly powerful emotions of fear and greed, is your best defense really a better tool? Or is it mastering your own psychology? Something to think about.